Quarter point, like when we really think about it, it doesn't have a tremendous financial impact yet because it's only 16 to 20 bucks reduction per 100,000, right? So if you had a $500,000 variable rate mortgage, it reduces by $100, right? Which I'll take $100 all day long, right?
Yeah.
But I think, and the other thing too is, I actually think that we did it too late. The reality is because the adjustment for clients is not actually going to be hitting their pocketbooks until August, because what happens is the rate reduction just happened today. Everybody's going to get a notice in the mail that says your payment will change as of July 1st.
Right.
So now your payment gets reduced July. You're not going to feel that until August. So what's going to happen is you're going to see, and statistically, every single time the Bank of Canada has dropped rates, mortgage arrears, unemployment, everything goes up astronomically after. Average 5-year fixed interest rate, when I was nerding out on this, over the past 25 years is 5.25%. So when you look at interest rates today, I can get a 5-year fixed interest rate, depending on my circumstances, anywhere between 4.8% and 5.3%, depending on my situation. So we are today actually at the 25-year average rate for 5-year fixed. So, to see that go lower, another thing with these rate drops is very important to make sure that people know that it is the...
Hello, everyone. This is Rob Golfi with RE/MAX, the Golfi team. Welcome to the Golfi Real Estate Show, Hamilton edition with host Rick Zamprin.
Good morning. If you want to sell your home or you are in the market to buy a home, call the number one RE/MAX team in Canada, the Golfi team, 905-575-7700. Online at robgolfi.com. That's Rob, GOLFI.com. They're dominating the social media game in town, whether it is Facebook or TikTok, Instagram, X, Threads, you name it, they're on it. Sensational content, hottest listings in town. Also online at robgolfi.com. You can also email a topic idea or a question for the Golfi team. The email address is questions@robgolfi.com. We'll address it on a future program. Lots to come on the show today, including celebratory news earlier this week for many home seekers, home buyers, maybe even home sellers as well. Bank of Canada reducing its key lending rate by 1/4 percentage point. We'll talk about that decision and the impact going forward. We also have a special guest on the show today, and his name is Brian Hogman, no stranger to the show. He is the principal broker and founder of Mission 35 Mortgages, online at mission35.com. Rob, we will start with you because I know you have a sensational story to share.
So I get a phone call from a realtor from Toronto. Now, he calls me up and he has a house to sell in Niagara Falls. So, and I usually get these phone calls. They call me up and they can't sell this house. And one of the biggest reasons is because they're selling their own investment property or whatever. They can't sell it because, one, it's overpriced. And I don't understand why they don't understand that, because they're a realtor. So I'm sure they have access to the information as I do. So anyway, he calls us up and he says, I got this house, Rob. I can't sell. I'm struggling. It goes, I need you to sell it. And usually when I tell them, what the price is, they kind of disappear, and all of a sudden it shows up on MLS at the price I suggested under their name. You know what I mean? And that's why sometimes I say, look, I need you to sign a contract right now, and I'm going to tie you up 6 months. And because you're using my information, my expertise, and I'd say, I've got you tied up. I'm going to tell you. So you either have to use me, I don't care what price is on there, or you're because why are you calling me, right? Yeah. So anyway, so this agent purchases this property in Niagara Falls on Valley Way for $1.1 million. Now, the closing date on this thing is, if I can read it was July. So he bought this in early spring when the market was
last year,
2020,
2 years ago.
2022.
Oh, right. That's right, when everything was turning.
That was the peak.
Rates were going up.
Everything was going crazy in the first quarter of 2022. Pays $1.1 million for this house, and I'm like, whoa, like because I know the area well, and I just, without even looking at the house, I go, whoa. I go, you paid a lot of money for this house. So I look it up, and we do a walkthrough. and it just needs a little bit of work. And he's telling me, oh, there's other houses in the area selling for whatever, 900 or more. And I go, really? I go, can you send those to me? Because I certainly can't find them. So, and I even checked the private for sales. So so I looked at it and everything. So I did get back to him. This guy ain't selling. This guy's not selling this house. And I said to him, look, you got two choices here. I go, he paid $1.1 million for this. I said, you have two choices. I go, I wouldn't list it higher than $850, and I don't even know if you're going to get that. And I says, and the one thing is, it's either you keep it, or you sell it, and you're going to lose a lot of money. And I told him, I said, you probably got a mortgage bigger than $850,000. And he goes, yeah. And I says, so can you write a check on closing date? Like basically, because he's going to have to make up the difference to close the deal if he sells it. So anyway, he's I said you either, I said just keep it for 10 years. He paid too much. Now this is the mistake a lot of I think the Toronto realtors, when they come into the Hamilton, Niagara, Brantford region, they're looking at this house for $1.1 million. Now this house in Toronto in that time period,
$2 or $3 million.
They're looking, that's a steal.
Right.
And it's like us going to going to the East Coast, and
to
Newfoundland, to Newfoundland, and seeing a house there for like $200,000, and we're going, that's a great deal. And maybe that's an overpriced house.
Right.
We don't know that.
Absolutely. And it's not too different from when you see people come from overseas, boosting up the property value. Because if people came from Japan or where Hong Kong, where property prices are actually astronomically higher than here, they come over and buy something. They see a condo for $500,000, $600,000, buy it in cash, and think, that's a great opportunity. Yeah. You really need to know the local market.
Yeah, exactly. So just this morning, my assistant is on holidays in Italy, and she sent me a message. She goes, "Hey, look at this. There's a place for sale for 150 euros." And I'm like, wow, that's cheap. But who knows? Who knows if that's cheap? You know what I mean? Like maybe it's worth only 10, 15,000.
It comes with the person in the house.
That's right, probably. Well, no, but in Italy, they're trying to, like, there's a lot of small areas like that people, there's not, the population is dying, and they want to have foreigners come in and buy these places. But anyway, I said, that sounds like a good deal, right? Look at me already. I'm thinking it's a good deal.
Right.
And meanwhile, I don't know if that place has been on the market for a year.
Yeah, my spidey sense is going up saying, what are the strings attached to it? There's something else that I'm going to have to come up money for.
You have to inherit the Italian boy in the basement that lives there with the parents, and he's like 45 years old.
It's like that movie with Pauly Shore, Pool House or something like that. They buy the house and Pauly Shore lives in the back.
So you got to get to, you have to keep my son. He has no wife. He doesn't want to get married, but you got to do his laundry. You got to do his laundry.
That's not a deal breaker for me. I think I can still make money on that.
No, he doesn't pay any rent. You can inherit him. Just like I inherited these two farm cats on this property I bought. I have to take these cats to the vet. I have the tenants taking care of them. I go, these cats cost me $800 last year to take them to the vet.
Wow.
Yeah. Oh, but anyway, I'm just, back to the story, everybody. Sorry to go off track. But anyway, but because of the Toronto guy, he's not going to sell this. He's going to lose money. Otherwise, I guarantee he's going to put it up for sale himself. He's not. I don't want it unless he has to give me a deposit of saying, listen, because it costs us money. If we say we're going to pay another realtor to bring us an offer, if there's no funds there to do it, you know who's on the hook of it? I am. I'm on the hook for it, and I don't want to end up costing me money to sell a house and lose money. So anyway, that's a little bit of the story, and a lot of people are going through that right now. A lot of people, and it's sad for people to do that.
So is there a third option to sell and buy something incredibly cheaper, like on the East Coast?
You know what? There are good deals out there. Like if you're moving into a house, if you're buying a house, I wouldn't nickel and dime over $5,000 or $10,000 because you're going to make that up over time if you plan on living there. Like for a long time. Like I'll tell you, the last 2 commercial properties I bought, actually last 3, I don't know why, but the last 3 commercial properties I bought, I've overpaid, but they've already gone up in value more than what I paid for them. Now I could have sat and waited, but I wanted these properties. I got what I wanted. I'm going to hang on to them for 10, 20 years.
I think that's the kicker right there, is that you have a long-term vision. I think for every property owner out there thinking about buying property, we went through a moment in time where people could make a tremendous amount of money in a short period of time, which set up ridiculous expectations. That wasn't the case 20 years ago, 30 years ago, and I don't think it's going to be the case for the next 10, 15 years. If you have a 10-year vision, buy the property, hold on to the property. I think time heals a lot of wounds and a lot of ups and downs in the market.
Oh yeah, for sure. There's people that bought in 1990, and those prices of houses, like in the local market here in Hamilton, Burlington, and everywhere, they bought in 1990. Let's say they bought for $160,000. Guess what? 1999, it was only worth $162,000. So people had to wait a decade before the market started climbing.
What was it worth in 2000? Like, so that same
it
person,
started
it
climbing,
was worth 320 or 350.
Yeah.
So then they doubled their monies. Like, so they had, and that was probably the only 10-year period within the past 60, 70 years.
Yeah.
You know, and I think we've just accelerated things. I think we're going to see a peak and a trough in a matter of 3 years.
For sure.
Right?
Anybody that bought in 2022 and 2021, anybody that bought in 2021, we're actually catching up to those numbers now. So if you bought in 2021, you're at break-even point, and maybe even better. Now, the people that bought in the first quarter of 2022, well, you're going to have to wait just maybe another year before you actually can break even. But I truly feel I back this up. I say this all the time. 2026 and 27, you're going to those numbers in 2022. You're going to be fine. So
I actually think that'll start in 2025.
Yeah, with the interest rates going down and everything else like that.
Yeah.
Just back to this fellow from Toronto who bought in Niagara Falls. Do you think that he was purely investing as an investor or a flipper? And do you think the days of the flipper are done?
No, he was investing as a investor, and I think time went by and the market went down, and they're like, because of interest rates right now the way they are, and the renewal, the rent will not even come close to what his mortgage is. So basically, his mortgage is more than $850,000. So Brian, chance like an $800, let's say a $900,000 mortgage right now at
if you're paying at 6%, because chances are you'd be closer to 6, you'd be paying almost $6,000, $7,000 a month.
And that house will only get him maybe $2,400 a month rent.
You're ridiculously
he is
underwater.
Bleeding so bad that he's better off just getting rid of that, paying the difference, and getting out of it and go on with his life.
Yeah.
Contacting the #1 RE/MAX team in Canada. That's the Golfi team. Online at robgolfi.com. That's RobGolfi.com. Our special guest today is Brian Hogman from Mission 35 Mortgages. Online, mission35.com. Before we get to the Bank of Canada's big announcement earlier on this week, let's get to some of the statistics. We're looking at sales and benchmark price from May 2023 to May 2024. Rob, there is a lot of red on this page.
There is a lot of red, and it looks like, I'll tell you, sales are down from May of 2023, but we're starting to see a little bit of a climb in certain areas. In Burlington, they're up year over year, and then. What else? Ancaster, big jump, 15% year over year. This is benchmark price. I'm talking about Niagara's taken a bit of a beating, eh? Like, I just don't get it. Niagara, I don't know what happened. I think they had such a surge of people moving out that way. And then now it's just kind of caught up, and house prices readjusted itself. And it's just for some reason, people have just put on hold going out there.
I think too, like this is year over year from May 2023. And if you go back just over a year ago, there was that pause in the interest rate cycle as well then. And there was a little bit of a spike in the market as well. Do you remember that? So back then there was like that glimmer of hope that we were at the peak, but we weren't.
Yeah.
So I think that actually spurred a little bit of activity which pushed prices up. So it's not to me, it's not a huge surprise that it's down from that month.
No. You know what? And I'll tell you, I think we're in a normal, good, balanced market. I do feel it's like we can sail through this thing here. It's just that the problem is when people have mortgages at 5-year rate and they got 1.5% to 2%, that's fantastic. I mean, all those people, hats off to you, because whoever advised you to sign up for that 5-year term, you guys did great.
Yeah.
But the ones that have, and some people did that 5-year rate soon, like earlier.
Yep.
And now the renewals are coming up. And going from 1.5% to 2% to 5% is a big difference. It is. It hurts no matter how much money you make. People are feeling the pinch.
Absolutely. Absolutely.
And so, but things are coming along. We're just floating along, balanced market, but things are going to spike up soon because But the biggest issue is they're not building as many houses.
No.
And that's going to be a major issue.
Well, they're all building the condos, right? It's all the condos, apartments. Even when you drive around, I see so many cranes in the Hamilton area, downtown, up the mountain, lots of cranes. Cranes build big high-rise buildings, right? Well, so the townhouse, the single-family home, that stuff.
But the new developments right now, they're not selling. The new condo developments, they're not. Investors aren't coming out in droves and buying them.
Oh gosh,
like look at what happened on King William there. Leona's got those 2 towers that went up. They were originally supposed to be condos.
Oh, they're rentals now.
They're rentals now, so they switched it over because they couldn't sell them.
Yeah. And do you know what the rent prices are? I looked at those. They're $2,900, $3,000 for 1 plus a den.
I mean, and they're going to be. I'll tell you, they'll be beautiful rentals. I mean, like when Leona puts something up, you don't want to have a condo. You don't want to have an apartment near them because they're not going to go there, go to your place. But they're becoming expensive even as a rental. So will they fill those up? I don't know. Like Leona's got lots of money. They can afford to lose money.
Yeah, well, and I think they're going to sit on their land banks for a while too, right? Like a lot of these builders, they have lots of land that they can continue to build on, but it's a business, right? I want to make money from my business. And if the numbers don't make sense, they're not building. And right now I don't see builders building.
No.
Unless it was already a project.
That's right.
Under construction.
Yeah. The ones that are finishing now that started 2, 3, 4 years ago, people have no choice. They got to close on them. But not everybody wants to live in a condo. Like you know what I mean? Like people, the condo's great, single person or people who are just getting married, but when they want to have like they want a backyard. They got to build townhouses. They got to stop this inner city high density in the inner city. Not everybody wants to live in the downtown cores. People want a suburb place where they can just enjoy and have a barbecue in their backyard. These condos, you can't have a barbecue.
No.
You know what I mean? Like
you're not even allowed to have it on the balcony.
No, because the smoke's going to go into your neighbor's balcony. But I do feel that it's just it's tough. The condo market is going to be tougher, and not everybody wants to be there because most people right now grew up in a suburb. So we may have to wait another 20 years where a kid was actually born and raised in a condo or apartment, and he doesn't care because that's all he knows, right? You want to live where what you know. Like people live in the North End. Other people that lived in the South End of, let's say, Hamilton or on the mountain, they say, well, I'm not going to live in the North End. But if you grew up in the North End, you say, hey, that's my neighborhood. I want to move there. And it's funny. A lot of people move into their old neighborhood no matter how tough or how bad the neighborhood is. You'd be surprised.
Yeah.
One more thing on the stats, and I found this really interesting when looking at the sales figures. Again, this is from May 2023 to May 2024. 25% decline in Brantford, 26% decline in Oakville, down 24% in Burlington, down 24% in Toronto. In Hamilton proper, east, west, central, and the mountain, down only 16%. Very different from the other 4 communities or metropolitan areas that I spoke about. Is there a reason for that?
It's hard to tell. Like month over month is different. Now, I think we're down in the month of May because the first 4 months of this year, people all heard on the news that we were going to drop the interest rates. We were going to drop the interest rates. They felt confident. The confidence came in. Then May hits, and because they're always saying June was going to be it. And I didn't think it was going to happen. I thought it may be too soon, but they did do it, and I think it was good that they did it because they would have stirred up a lot of problems in the market. So what happens is May hits, the people are going, you know what? Let's wait to see what happens in June. And that's why sales were down year over year in May, because people thought, well, we're this close to June. Let's see what happens with the interest rates. And guess what? They did lower it. I already see a spike in the market in our sales already. I watch them every single day. So I do feel June's going to be a really good a good month, and we'll probably surpass the numbers of June of last year. And because people are now, we're here. The announcements made. People are
I think you're going to see the spring market in the summertime now.
Yes,
because now that the Bank of Canada, has dropped the rate, the quarter point, there were a tremendous amount of fence sitters. We had pre-approvals, people looking to buy and waiting, right? Like you said, sitting there waiting to see if it's going to be cheaper. And no matter how much we try to tell people, and I still think this is true now, is that I think rates are still going to continue to go down through the balance of the year. But what you'll see conversely on that is property values go up. Typically when rates go down, prices go up. And the amount of money that you're going to save on a quarter point is not the same amount that you'll pay extra if the property increases by 3 to 5% over the next 6 to 9 months.
It's a good point. So to that end, let's transition to what the Bank of Canada had to say earlier this week. They cut their rates by a quarter of a percentage point. It's now down to 4.75%. What do you think is going to be the impact? I know you just referenced that, the spring market is going to be really in the summer. Apart from that, is that going to be extended into the fall and maybe further?
I think we're going to see tremendous activity in the spring and summer. The quarter point, like when we really think about it, it doesn't have a tremendous financial impact yet because it's only $16 to $20 reduction per 100,000, right? So if you had a $500,000 variable rate mortgage, it reduces by $100, right? Which I'll take $100 all day long, right?
Yeah.
But I think, and the other thing too is, I actually think that we did it too late. The reality is because the adjustment for clients is not actually going to be hitting their pocketbooks until August, because what happens is the rate reduction just happened today. Everybody's going to get a notice in the mail that says your payment will change as of July 1st.
Right.
So now your payment gets reduced July. You're not going to feel that until August. So what's going to happen is you're going to see, and statistically, every single time the Bank of Canada has dropped rates, mortgage arrears, unemployment, everything goes up astronomically after. And the reason being is because they've done it too late. So I think what you're going to see is you'll probably see TIF pause in July, right? Because none of these numbers, the Bank of Canada is going to meet again in July, but none of these numbers are really going to have the lagging effect yet. And then you're going to see something big in September, I think.
There you go. See?
So you'll end up seeing probably in September. I wouldn't be
another rate drop.
I think, mark my words here, hey, why not? We all love the prediction game in the mortage world.
Yeah.
Just kidding.
I know. Because if we're right, we replay it. And if we're wrong, we
just hit delete, right? So let's say, okay, that I believe that in September we're going to see a 0.5 point reduction. You're going to see nothing in July because these numbers are not going to get better.
Yeah.
The $100 savings is, it helps, but
it's not enough.
It's not going to get pumped into the economy again.
No.
So they're going to have to make bigger adjustments come September.
Yeah.
So will that be the last of it? If you look deeper into your crystal ball, if you shake your magic 8 ball, what does it say?
Yeah. What do you think? I think so. I looked at the was it 20-year mortgages? Remember there?
Oh yeah.
So yeah.
Mm-hmm. So the average rate. So here's the thing, right? Which I think is very interesting. The average 5-year fixed interest rate, when I was nerding out on this over the past 25 years, is 5.25%. So when you look at interest rates today, I can get a 5-year fixed interest rate, depending on my circumstances, anywhere between 4.8% and 5.3%, depending on my situation. So we are today actually at the 25-year average rate for 5-year fixed. So, to see that go lower, another thing with these rate drops is very important to make sure that people know that it is the variable rate that's going to be doing this considerable dropping. The variable rate today, if you're on a line of credit, you're paying 7.7. That just went down to 7.45, right? If you were on the bank prime. The fixed rates are not going to drop in direct proportion as the variables. So what that means is that to lock into a fixed rate today, still not terrible. The rates have to still go down another 150 basis points. That's 1.5% in order to meet a fixed rate that you lock in at today. So I think we're definitely going to see more rate drops, but it's going to be on the variable side. I think fixed will probably drop a little bit on the short term, that 1 year, 2 year, 3 year term. You'll see them drop a little bit, but on the 4-year, 5-year fixed, you might see them drop marginally, but I think they're probably going to be pretty sticky where they're at.
Mm-hmm. And is that because the banks, at least for the most part, the big banks know that most people are going for the 5-year because they want that stability?
I think it's mostly because the banks, they look at the future market. They look at what it's going to look like in the future. And I think the banks, the banks will adjust their spreads to suit themselves, I will say. But I think we are in what's called a rate inversion right now, where variable rates are higher than fixed. You, as a Canadian consumer, takes on risk when you take on a variable rate. So that variable rate should be lower than the fixed. So we need to get into, for a normal marketplace, we need to see the variable rates drop below the fixed. And right now, I love radio because I'm talking with my hands right now. That just doesn't work. but right now, the fixed being lower, it's wrong, right? It's just so that's why you need to see the variable rate drop lower and lower. And the banks, they're going to adjust their rates accordingly. One thing that they will adjust is their discounts on variable rate. So that's something to pay attention to.
Interesting. When it comes to home building, does this Bank of Canada rate announcement make a dent? Because we know that, that the target is to build 1.5 million homes by 2031. We are definitely behind, speaking of the 8 ball, definitely behind the 8 ball. Does an announcement like this convince home builders to say, okay, let's start up our projects, or are they still waiting for further rate declines to happen?
I think the home builders right now are suffering a little bit because what happens is the homes that they currently build pays for the land and interest of the land banking that they have. Now they're feeling the pinch with this because they're not building, so they don't have the cash flow. So now they have to dig into their reserves of funds to pay for what they've bought that they plan on building in the future. And so they do want to build, but they don't want to get in trouble. Mm-hmm. And I don't know if a 1/4 point is going to be enough. Now, for developers building high-rise condos, the investors, I don't know if they're going to come back just quite yet because a lot of them got stung. So, and what drives a condo high-rise is investors. Right. The investors are the ones that make things happen because you get an investor, you get 500 investors and each buying 2 or 3 condos. Guess what? You build up 600. You got 600 condo unit building. It's easy to if you get 80% sold or 75% sold, the banks just say, okay, you're good to go. We're going to give you the money. You go ahead and start digging.
It'd be interesting, and we're just talking about this right now. I wouldn't be surprised if we see a condo shortage in 4 to 5 years. Yeah. Right? We're going to have a condo surplus right now where people don't want to live in them. But then what's happening now is I see it on the mortgage side is all the builders right now are building apartment buildings because they can get cheap money through Canada Mortgage and Housing. Yeah. Right? They're giving out 50-year loans at record low interest rates to spur the building for apartment buildings. Yeah. So if I'm a builder, I'm going to go for cheap financing and build what I can get cheap money for. Yeah.
And before the break, you were talking about a condo shortage, and I just had the wheels, slow turning wheels in my noggin go round and round. Is now a good time to invest in the condo market and then sell during this shortage?
Yeah, I would say yes and no, right?
Yeah.
Because I think the average condo purchase right now is you're going to be underwater when it comes down to cash flow, right? Because if you're financing some of it, you're going to lose money. But I think to Rob's point earlier, and what we've talked about is that long-term hold. If you have money that you put on the sideline and you want to invest in a condo, you put down the 20, 25%, maybe 30%. And you want to end up having cash flow. So you take a variable rate. This is where I think a variable rate would be good, because as it goes down, I think you'll actually be in a good spot. But I think you're still, it's
risky.
Very,
I don't think I would do it, because you're losing money every month.
Yeah.
And then you're going to have to drop your what kind of rent you want to take, and you're probably going to have to feed that mortgage $1,000 out of your pocket a month.
100%.
Yeah.
And that's why I think it's one of those, it's a speculative one, but I think if you had the long-term vision to look at it between 5 to 10 years from now, I think you'd be fine with it.
Yeah.
But I wouldn't be putting all my eggs in that.
If I was a young investor, don't go near it. I wouldn't. Yeah. If you're in your 20s or even early 30s, stay away from that, and because it'll bury you. It'll sink you.
I'm glad you answered it that way, because it leads to my next question and the next kind of subtopic, and that is the revolution that we are undergoing in this country. There's a lot of federal dollars being spent on 4-unit residential buildings, for example, fourplexes, in which the premier of this province is not a big fan of, but the federal government is saying, hey, municipalities, Hamilton, Burlington, Niagara Falls, Toronto, whatever the city is, we'll work with you to get more of these fourplexes in place. Is that, from an investment standpoint, is that a much better play, given that you can rent these fourplexes out and there's your cash flow?
I think these fourplexes is a perfect opportunity to get into the market. If you can find a lot, build them, and you've got rental income. You probably can get $2,500 for each unit. You know, like you build like a raised ranch fourplex, right? You got your one in the basement that's kind of raised, and people would prefer living in a fourplex than living in an apartment building.
I was just going to say, I think it's a great way to get into the market.
Yeah.
You could live in one of those.
Yeah.
I remember I lived in a duplex, my first home, rented out half and lived in half. If I were to do it again, I'd live in a fourplex as a single guy, single girl, single whatever.
Or a couple,
Your first unit, you just, and my God, that would accelerate your finances so quickly because you would make money almost living somewhere.
Yeah.
If you had a fourplex.
I think fourplex is the way to go. And if you can find a spot, you know what? And
would you build it or just buy and convert?
Well, you know what? It's harder to find, buy and convert. If you can find a really cheap lot, like the cheapest house out there, and which is hard to do. Yeah. But I mean, can you find a property in, let's say, downtown Hamilton, and that's wide enough that you can fit a fourplex, because you need parking too. So, you know, but the opportunity is there. And I'm telling you that this is a way to get into it. And 20 years from now, they're going to stop it, or, you know, saying that we can't do that anymore. And the people that built it and have them, they're going to benefit. And then there's going to be a lot more influx of these available down the road for other investors to buy down the road. And it's a great opportunity for everybody. Maybe you don't want it next door to you, but it just depends what's going on. Look at downtown Hamilton. You got
those huge Victorians.
Yeah, right? Those Victorian homes. You got five families in there, five plexes.
Unfortunately, no one's going to sell them now because of the new capital gains tax.
So. Oh, you know what? I know.
Yeah.
So they will not be back in the housing market. People will just refinance those, take the equity out, spend it,
and let the kids pay the taxes when they die.
Unfortunately.
Yeah.
Very true. But as a young investor, I mean, this is a great opportunity. If you can find, the perfect place, maybe you move into one of the 4 units, you rent out the other 3, and it's almost like a win-win.
It's 100%. I think if I'm a new, first-time buyer, first-time investor, I would take the duplex, triplex, fourplex over a condo any day of the week, because a condo has... even if you're going to hold on to it for 10 years, the fourplex will be far superior.
Oh, big time. Yeah. I that's the way to go. So if you're young, you got grandkids or kids that are looking to buy, see if you can find a duplex, triplex, fourplex. That's the way to go.
Yeah.
All right. So when we come back, we're going to transition to a very interesting yet sad story about an immigrant who's been living in this country since 1999, but is now considering leaving the country because he's questioning whether it's worth staying here because of the cost of living and the housing costs. We'll get to that story next here on the Golfi Real Estate Show, Hamilton edition on 900 CHML. All right, last one, and this one's 6 as well. And last go round here on the Golfi Real Estate Show, Hamilton edition on 900 CHML. Rick Sanford with Rob Golfi, sales representative, RE/MAX Escarpment Realty, the Golfi Team. RobGolfi.com, the website to get your home listed on. That's RobGolfi.com. You can do so by calling the number one RE/MAX team in Canada, the Golfi Team, at 905-575-7700. That's 905-575-7700. Special guest today, Brian Hogman from Mission 35 Mortgages. Looking to renew your mortgage or get a new one? Head over to mission35.com. Really interesting yet sad story, and I'm sure this is one of many in this country. This immigrant is from Colombia, has been here since 1999, has really loved his life in Canada, but is now questioning whether or not it's worth staying here, given that his family's from Colombia. Things appear to be much better there in terms of the cost of living, significantly less for housing, food, more affordable there than it is here. They still have access to quality healthcare and education, which is great. A lot of our household income goes to taxes here. Makes all good points. What are your thoughts on this? Pretty sad.
Yeah, it is. And you know what? And a lot of people are doing that. That's just one story of many stories. People are leaving Canada. It's not cheap here. I'm going to tell you. It's not. I'm even considering doing someplace. No. Going someplace. Like
Golfi in Texas.
That's it. That's it. But you know,
there you go.
It is expensive. and I see people, they're here and they're living paycheck to paycheck. And they're just like one little problem, even with their car that may cost $1,000 to repair, sets them back months just because it's hard for them to afford to continue. It is tough in this country, and people are saying, you know what, why do I have to work so hard, work 2 jobs, and it's such a fast-paced living we live here, but then when they go to their old countries, we're talking Europe or even, South America or anywhere, the quality of life is way better, and it's not as expensive. I get it. And you're going to see more and more people doing that, and we're too late to fix this. We are too late, and it's going to take 20 years for this to get fixed, and they don't know what to do. The builders are sitting on the sidelines saying, "Hey, these interest rates are killing us," and so they're not building, and the government wants to build houses, but how do you do that? It's tough. I don't know what to do. This is a mess that started 20 years ago.
Well, and it's tough. I think you sometimes are supporting the wrong people. I think there's a lot of brain drain. Remember that conversation going way back where it's people end up leaving to go to the States, because if I'm taxed 40 or 50% of my income, and if I'm a entrepreneur, if I'm a business owner, and I've got other families to feed because I'm trying to employ people, I'm trying to grow a business, I'm trying to do these things, I'm taxed the most and I'm hurt the most.
Yeah.
So if I have the opportunity to build a business, then you start to think, well, where should I build it? Should I build it here? I love Canada and I love being here, but I'm taxed so much and I'm not getting support.
Yeah.
I'm not getting the tax breaks. I'm not getting, anything to help this. And then I go down to a place I've seen lots of people move to the U.S. Lots of people move to the U.S. And I'm not an advocate for that, but I had a friend that moved down there, and one of the biggest things we always talk about is healthcare here. But for him to have healthcare down there, it ended up costing him about $8,000 a year for a family of 4 to have state-of-the-art healthcare.
But he's not being taxed $25,000 off his income. I'll tell you, a cousin of mine moved down there, and they are having a successful business, and they're renovating and flipping properties and buying them, and very successful out the gate. I'm going to say, when you move to the U.S., if you're an entrepreneur and you want to open up a business, your success rate is way higher than it is here in Canada. In Canada, it's tough. You want to hire more employees. They make it it's tough here. So Canada's got to look and see what the Americans are doing and adapt that over here for business people that want to open up and have a business here. And but we're being taxed. I don't know. They're going to keep taking from us. Like,
Yeah,
we're
I agree. Well, we have a
Mhm.
lot of social services that we support. We have a lot of infrastructure that we want to build, and I think just like not any government, but I think we have mismanagement of funds as well too. You know, do you know how much Tiff Macklin makes?
No, yeah.
Do you know how much he
lot.
makes? Guess how much he makes.
Too much.
What's he making?
He makes between $475,000 to $600,000 based on the pay grade there. So he makes almost. And I'm not saying he's not worth it. You know, God bless Tiff. I wouldn't want to have to make his decisions.
He just comes out once a month and makes an announcement. That's not a bad gig.
It's like Wyerton Willie almost.
Yeah, he's like, I'll take my $60,000 for this press conference, please.
He goes, I'll see you guys next month. I'll see you guys next month. I'll make my announcement.
That's all he does. Yeah.
And he does his homework the night before.
Yeah, he crams. Oh, geez. He phones a friend. Oh, what do we do here?
What should we do?
What do we do?
Yeah, we only hear about this guy once a month. What's going on? What's he doing the rest of the month?
Yeah, that's a pretty fat paycheck. There's one other wrinkle to this. We don't have much time to get to it, but this is a young guy, relatively young guy who's got a young family, but he's also saying that, we know some boomers who immigrated to Canada, 20, 25 years ago were also considering going back to their country of origin because in order to be mortgage free and live out the rest of their life in style the way they want to, they'll probably have to move away. So that's interesting. That's a topic for another day. We got to go. You can listen to our show online through Spotify, iTunes, Google Podcast, Stitcher, and many more. Just search for the Golfi Real Estate Show in your favorite podcast platform. Hit the follow button so you never miss an episode. Big thanks to Rob and Brian, and thank you for listening to the Golfi Real Estate Show. We're back next Saturday at 9 on 900 CHML.